Howdy. Hope all is well where you are at. A lot has happened since the last time I saw y'all. Over the weekend here, we had a tariff deal announced with China, in addition to the one with the UK. That's been good for the stock market. When things are super good for the stock market, the bond market naturally pulls back. It's not the end of the world, but we have a little bit of turbulence here to start the week off. Last week, at two different bond purchase auctions, the Fed stepped in and bought about $35 billion worth of bonds and mortgage backed securities. That could have been a move to keep the auction looking good, looking like a positive auction. Uh, Also an effort to keep the mortgage market from going, further south and tanking a little bit. There's been no change to the Fed funds rate. At the meeting last week, they said they want more data before they make any changes up or down. But between the strategic uncertainty and the deals with China and the UK, there could be less risk of future inflation. So the probability of Fed rate reductions later this year has kind of gone up a little bit. So something we can hang our hat on. Specifically, with no discount fee, rates are virtually unchanged, a little bit higher, 6.875 on the 30-year fixed. It's Monday afternoon as I do this. And then FHA, VA, USDA, no discount, still in the low sixes. Doesn't really move the needle as far as what it does to a payment. I think some people might be afraid of the headlines right now, so it's good to get in front of them or get them in front of me so we can really flesh out why it's a good time to purchase right now. On the bottom in red here, that is a Washington State only ARM that we have out. It's a 5-year fixed at 5.75, costing only zero point 0.5 discount right now with a very small down payment. This is a great product that I wish we had in Oregon, but we don't. We can come close. We're closer to 6 on that in Oregon, but to be in the fives with virtually no discount fee in Washington is a great little program that we have going on up there. So if everybody's selling up there, it could be a nice selling point for them. Buy before you sell. I want to talk about this one more time because I want to make sure it sinks in why I do these the way that I do. If the home that you are selling has 30% equity, that means that all loans against that home occupy 70% or less of the sales price or appraised value. You have 30% equity. Then, with the program that I have, we can remove those payments on the mortgages, the taxes, and the insurance on the house you're selling. We take those out of the debt ratio on the purchase loan to buy the new house. Now, you still may have to make double payments, because you want to get out of the house, clean it up. And for that purpose, you might want some cash in hand. You might want it to have as reserves to make those double payments or to pay for the move itself and to clean the house up and stage it, things like that. That's why point three here, if you have room, I would advise doing one of our quick HELOCs, home equity line of credit, instead of a bridge loan. Because when you do a bridge loan, the lender retains that money and it's only good for the down payment on the home that you're going to purchase. You can't reach in and pocket any of that to do any work to the house, to have in the bank in case you got to make double payments, or to have in the bank if the loan you're doing requires that you have 6 to 12 months of reserves to protect risk against that loan. So, point four, I have found a couple of times now that doing our quick 1 week home equity line of credit before the house goes on the market, getting some cash in savings and checking alleviates the pressure for your client to where they're thinking, my God, if I got to make a house payment on the old house, the first house payment on the new house, I want to have more than just a bridge loan paying the down payment. I want some stuff in the bank here. I want to be flush a little bit with cash. So the home equity line of credit that I do takes about 1 week. The house can't be for sale yet, and it's a great way to get some cash because we take that payment out of the debt ratio too. You can have a mortgage and a home equity line of credit as long as you have that 30% equity. When it's all said and done, we take those payments out of the debt ratio. You have some cash in savings to make double payments. You get out of the house, stage it up nice, get an optimal price on it. And that's about it for me. I will see you next week. Thank you.